money isn't really yours. Banks decide how much you can have, when you can have it, and if you can access it at all. It sounds extreme, but it's true. The world's top 10 banks control over $30 trillion, more than most countries combined. And while you're working 9 to 5, banks are making billions off debt that doesn't even exist. The entire financial system is a game, and banks make the rules. But what if I told you they've been rigging it against you from the very beginning? If you think your money is safe in the bank, think again. In 2008, millions of people lost their savings overnight while the banks that caused the crisis were bailed out. And it's not just history. The same system that allowed that collapse is still in place today, and it's more dangerous than ever. Banks are not just places to store money. They control entire economies, governments, and the lives of billions of people. They make the rules, break the rules, and when they fail, it's ordinary people who pay the price. By the end of this video, you'll see how banks create money out of thin air, keep people trapped in debt, and even have the power to shut down entire industries. And stay until the end, because I'll reveal the #1 strategy the rich use to protect themselves from the banking system's hidden traps. When you deposit money in a bank, you assume it's sitting there waiting for you. But that's not how banks work. Banks don't just hold your money, they use it. They lend it out, invest it, and make profits from it. The cash you deposit isn't even really yours anymore. It's legally considered a loan to the bank, and if everyone tried to withdraw their money at the same time, the entire system would collapse. This is called a bank run, and it's already happened multiple times throughout history. The Great Depression, the 2008 financial crisis, and even recent events with regional banks have proven that the system only works as long as people trust it. The moment that trust disappears, everything falls apart. The debt trap. Banks don't just make money by holding deposits. Their real business is debt. The more people borrow, the more money they make. Ever noticed how easy it is to get a credit card? How banks push people to take out mortgages, car loans, and student loans? That's because debt is their biggest source of profit. And here's the real trick. Banks can create money out of thin air. When you take out a loan, the money doesn't come from existing deposits. It's simply added to your account as new money. This is called fractional reserve banking, and it means that banks are literally allowed to print money while keeping people in a cycle of endless repayments. The more debt people take on, the richer banks become. And if people struggle to pay it back, banks profit even more through interest and fees. When banks fail, they don't suffer the consequences. Governments step in and bail them out, using taxpayer money. In 2008, major banks were on the verge of collapse after years of reckless lending and financial manipulation. But instead of letting them fail, governments handed them billions of dollars in bailouts. Ordinary people lost their homes, their savings, and their jobs. But the banks, they got richer. The CEOs who caused the crisis walked away with massive bonuses. The same system that failed millions of people was kept alive, because banks are too powerful to fail. And the reason banks get this treatment? Because governments rely on them just as much as people do. Governments borrow money from central banks, which means they owe interest on the loans. The problem? The money to pay back that interest doesn't exist unless they take out even more loans. This creates a never-ending cycle of debt. Governments are permanently tied to the banking system. Take the United States, for example. The national debt is over $30 trillion, and it keeps rising. Why? Because every time the government borrows money, it has to pay back more than it borrowed. To cover this, it has to either raise taxes or borrow even more money, which deepens the debt trap. Banks don't just influence governments, they control them. Through lobbying, political donations, and financial leverage, they ensure that laws and policies always work in their favor. If a politician dares to challenge the banking system, they are either ignored or removed from power. And this isn't just a problem in the United States. Around the world, governments depend on banks to function. Without them, economies would collapse overnight. That's why, no matter how many crises banks create, they are always rescued. The Federal Reserve and the illusion of independence. Many people think central banks like the Federal Reserve are government agencies. They're not. They are private entities controlled by powerful banking families. Take the U.S. Federal Reserve, for example. It prints money out of nothing and lends it to the government with interest. Every dollar printed is debt that must be repaid, with even more borrowed money. This gives banks absolute power over governments. They dictate economic policies, influence elections, and even fund wars, all to keep the debt cycle running. Banks and wars, the ultimate business. History is full of examples where banks finance both sides of a war. Take World War I and II. Banks provided loans to multiple nations, ensuring that no matter who won, they would still profit. Even today, major financial institutions have ties to the military-industrial complex, funding arms manufacturers and war efforts worldwide. The more instability and conflict, the more governments borrow, keeping banks in power. The IMF and World Bank, global control mechanisms, international financial institutions like the International Monetary Fund, IMF, and the World Bank are tools used by banks to control developing nations. These institutions provide loans to struggling countries, but with conditions, forcing them to privatize public assets, cut social spending, and open markets to foreign investors. These traps poor nations in perpetual debt, giving banks and multinational corporations control over their resources. You might think you're free because you don't have government debt, but banks control you in ways you don't even realize. Credit scores, the invisible chain. Your ability to buy a house, rent an apartment, or even get a job depends on your credit score. A system entirely created and manipulated by banks. Take the mortgage industry, for example. Banks decide who qualifies for a home loan and at what interest rate, making homeownership nearly impossible for those who don't fit their criteria. If you don't have a high enough credit score, you'll be forced into renting, paying landlords instead of building wealth. Inflation, the silent tax. Every year, inflation eats away at your savings. Why? Because central banks keep printing money, devaluing your purchasing power. The $100 in your account today will buy you less in 5 years. For example, in the 1970s, you could buy a new car for around $3,000. Today, that same car costs over $30,000. Your money isn't growing, it's losing value because of excessive money printing. And who benefits from inflation? Banks and governments. As prices rise, they collect more in taxes, while your salary remains the same. If you think banks are powerful now, things are about to get much worse. Governments and central banks around the world are pushing for digital currencies, known as central bank digital currencies, CBDCs. At first, they seem harmless. A digital dollar or digital euro sounds like a modern innovation. But in reality, it's the next step toward total financial control. With CBDCs, banks and governments will have the ability to track every transaction in real time, freeze accounts instantly if they decide you violated a policy, implement expiration dates on money, forcing people to spend within a time frame, restrict how money is used, for example, banning purchases of certain items. China has already introduced its digital yuan, where spending can be restricted or monitored by the government. Once cash is removed and digital currency takes over, banks and governments will have absolute power over how people spend their money. And here's the scariest part. If banks can freeze digital accounts, dissent becomes impossible. People who protest against policies, speak out against corruption, or simply make transactions deemed suspicious could see their funds locked instantly. This isn't a distant future. It's already happening. While the middle class struggles with debt, the ultra-rich don't play by the same rules. Billionaires don't save money in banks. They use strategic debt, tax loopholes, and asset protection methods that regular people don't have access to. They own businesses to reduce taxes, invest in real estate instead of keeping cash, leverage debt instead of spending their own money, use offshore accounts to protect wealth from government policies. Banks want the middle class to save and earn wages, while the rich invest and borrow strategically. The biggest lie banks tell people? That saving money makes you rich. Now, I want to hear from you. Do you trust banks? Or do you think the financial system is completely broken? Let me know in the comments.